Good morning, guys. JR with Secure Metals with another technical look at both gold and silver. Today is Wednesday, February 20th, 2013, and it's approximately 11:15 a.m. Eastern Standard Time. Now, before I get into the analysis, guys, I wanted to touch a little bit about our national debt, and I also wanted to touch a little bit about the relationship between gold and our U.S. dollar. You know, when I look at this debt here of $16 trillion, I often ask myself, how is this even possible? How can a country so advanced, the biggest nation, the biggest empire in history, how does the United States allow themselves to get into a $16 trillion debt? You know, again, I think it has a lot to do with understanding the way money works and understanding the way currencies work and why we even have currencies in the first place. You know, I think most of us don't really sit down and, you know, I'm really shocked when I speak to people and really $16 trillion is not really a number that they really thought about too much. So they're really not that worried about it. And when you hear in the news, I guess the news doesn't really say that or signify that there's anything even wrong with our debt. As a matter of fact, they praise that deficits are actually good. And they rave on how we need deficits to stimulate the economy. So again, it's almost like, you know, I speak to other people and they say, well, we need the spending because, you know, we need to stimulate and so on. And my question is, I guess, when do you stop spending and when do you start paying the bills? You know, we're talking right now, we hear the talks about the sequester, and the sequester is really a few bills that are going to expire or whatever the case is. And what's going to happen is we're going to have some spending cuts, and we're going to have to raise revenue when the sequester comes through. But in reality, isn't really that what we need? We need more revenue, and we need to spend less. So it's almost like the sequester is gonna be the end of the world, and in reality, all it is us is us paying the bills and raising revenue to pay those bills. So it doesn't really make a lot of sense that they're not going to allow the sequester to come to come about. But again, not that I'm a fan of raising revenues. I'm just trying to justify $16 trillion and how we're going to pay that. Now, I've written here, and again, my question is, how does a country allow a nation, how does a nation get themselves into a $16 trillion hole? Right? Well, number one, we have a fiat system. Our dollar is not worth gold anymore. It no longer represents any gold ounces. So again, we are in a fiat system. We're in a system that only carries paper as means of purchasing goods. And throughout history, that goes against everything we understand about currencies. If you look up the word currency, if you look up what money is, this is the answer that you'll find no matter where you look. It has to be durable. It has to be divisible. It has to be portable. It has to be accepted by the market. And these two are very important. It has to be scarce, and it also has to maintain its value. So again, the dollar is really not a scarce, is really not a commodity. It's not a commodity at all. But the dollar is not scarce. If you can print $85 billion every single month, you can. And I mean, I guess you can argue that it's really not scarce, right? Then you also have the store value. The dollar, again, does not have that characteristic. It does not have that property. It does not maintain its value. Within the last 100 years, the dollar has lost 91% of its value. It'll never lose 100% of its value until we decide not to take it anymore as a legal tender. So in order for that to happen, I would imagine hyperinflation would have to come in, and then obviously no one would trust the paper dollars. We'll see $10 trillion bills floating around or whatever the case is. And again, we will no longer accept those. That's the only time you're going to lose 100% of a currency's value. But at any rate, my point being that the U.S. dollar is really not a currency, and that's the only reason why we can have debts that exceed $16 trillion. Right now, they're talking about raising the debt ceiling. You know, don't let that bother you. Don't let that worry you, because the debt ceiling will be raised. They've raised it over 100 times, I think, in the last 100 years. As a matter of fact, the debt ceiling in 1913, when the Federal Reserve came in and they centralized the banking system, the stipulation was that the Federal Reserve was not allowed to lend the U.S. government any money. That was the main stipulation. You're not to lend money to the United States. And really, the reason why the capable people or the capable civil servants back then, they understood the dangers in allowing a banking cartel take over the nation's supply of money. So they gave it limitations. And again, one of the main limitations was that it was not allowed to lend the United States government any money, simply because the hand that feeds you is usually the hand that owns you, right? So when you owe me money, in essence, I own your labor, I own your jobs, I own everything until you pay me back. Then in 1929, we got into some trouble. We got the Great Depression. We got involved in the Great Depression, or the Great Depression began. And what happened then was they said, okay, the government went into the Federal Reserve. They said, we need to borrow money. The Federal Reserve said, I can't unless you get them to say I can. They made, what they did was they allowed the government to borrow money from the Federal Reserve. And by borrowing money, a new stipulation was, okay, you're going to have a debt limit of the amount of money. I think the debt limit started at 11 billion. And again, right now, the debt ceiling is at 16 trillion. So from 11 or 12 billion that it was back then to 16 trillion. Again, the only way we can have debts accumulate in that type of manner is if we have a money that's not real, and if we have a currency that does not have real characteristics of money. Now, I've said it 1,000 times, and I'll say it again. Gold and silver, because they are real currency, they maintain their value. It's scarce, and it's a store value. In 1963, a gallon of gas was 27 cents. If you have a quarter from 1963, you can still buy a gallon of gas today, because that quarter has a value of roughly $5 plus. So again, and the reason why it's able to maintain this value, it's because it's real money. Okay, guys? So before I get to the next, I just wanted to, I think this whole thing about inflation, and I think this whole thing about banking, I think our founding fathers knew about this. I have some quotes here that I'd like to read to you guys, just to show you that this is really what our founding fathers wanted to prevent. They wanted to prevent a system where the government was involved with other corporations, like the Federal Reserve, which is a private bank. And they wanted to keep the government very, very, very small. And I think some of these quotes give you the type of fear that that were in our founding fathers' hearts when they originally installed the Constitution. So I'm not going to read them all here, but I'm going to read just a few here. If the American people ever allowed private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around them will deprive the people of all property until their children wake up homeless and on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs to. Free market, Thomas Jefferson. Okay. This is a good one. I like this one by Abraham Lincoln. I have two great enemies, the Southern Army, that's in front of me, and the financial institution in the rear. Of the two, the one in the rear is my greatest foe. All right, this is by James Garfield. Whoever controls the volume of money in any country is absolute master of all industry and commerce. And when you realize that the entire system is very easily controlled, one way or another, by a few powerful men at the top, you will not have to be told how periods of inflation and depressions will originate. James Garfield, assassinated a few weeks after the statement. Okay? I sincerely believe that the banking establishments are more dangerous than standing armies, and that the principles of spending money to be paid by posterity under the name of funding is but swindling futurity on a grand scale. That was also Thomas Jefferson. If the people only understood the rank injustice of our money and banking system, there would be a revolution before morning. President Andrew Jackson. When a government is depending upon bankers for money, they and not the leaders of the government control the situation. Since the hand that gives is above the hand that takes, money has no motherland. Financiers are without patriotism and without decency. Their sole object is gain. This is Napoleon. This is 200 years ago. History records that money changes have actually, I don't need to go on here. You get the picture. So again, as we can see, there was a lot of fear in the founding fathers here. They did try to at least put some common laws and set up a constitution that prevented us from allowing this whole shebang here to happen here. But at any rate, I know I'm about 10 minutes into it, so I'm going to try to make this within the next 10 minutes. The next thing that I wanted to talk about here was the relationship between the dollar and gold within the last 200 years. And I think this will put things in perspective of how much purchasing power the dollar has lost within the last 100 years. So again, really cool article. Link will be at the bottom. I'll only read my favorite parts about the article here. The Mint Act was passed in 1792, and the U.S. dollar was pegged to gold at 1.604 and silver at 24.05. That $1 equal to 1.604 grams of gold and 24 grams of silver. Okay. The first paper money was issued in 1862 without the backing of any precious metals, thanks to the American Civil War, but the link between paper money and gold and silver was reinstated in 1878. So roughly 16 years, guys, we temporarily took it off and we put it back on. Again, the Constitution does state that during emergency situations, during a war, we can get off the gold standard only temporarily. When things get back to normal, when we have peacetime again, we can roll back into a gold standard to preserve the purchasing power of our coin or of our currency, right? The Gold Standard Act of 1900 tossed the bimetallic standard out and put the value of the U.S. dollar at 1.05 grams of gold. That effectively valued 1 troy ounce of gold at $20.67. Silver coins were continued to be minted until 1964. This is why I always give that example of 1963, 1964. When a quarter purchased 1 gallon of gas. Gold was confiscated in 1933 during the Depression, and the gold standard was changed. So 1 troy ounce of gold equaled $35. The standard stayed in place until 1968. Between then and 1975, several gold pegs were put in place. 1971, gold was priced at $42.22. 1971, 40 years ago, gold was $42.22. That's when the U.S. dollar began to float freely in the foreign exchange markets. The result of this flotation was the creation of the dollar reserve system made possible by Saudi Arabia. The House of Saud agreed to take nothing but dollars for oil, forcing the rest of the world to hold dollars and effectively allowing the U.S. to export its monetary inflation. So I think this article puts things in perspective and really the amount of purchasing power that we've lost within the last 200 years. More importantly, the amount of purchasing power that we've lost within the last 40 years. Now, again, if you type in currency and you type up a fiat currency and you type up a, let's say you type up the average lifespan, what you'll find that the average lifetime of a fiat currency is roughly between 35 and 45 years. Very scary. We are on our 42nd year, and by the looks of things, it looks like everything that our founding fathers predicted would happen if we get off the gold standard and allow bankers to take over would happen, has already happened. So, finishing up with this section, the government is really making a huge effort to devalue the currency. And again, why they're doing it, we can only speculate. Maybe it's unintended consequences. Maybe they're doing it on purpose. I don't know what the situation. I think the evidence suggests that they bring about all of the volatility in the market. And really what this is just a correction through time. Ultimately, dollars are denominated. Gold is denominated in dollars, and the government is making a big effort to decrease the denominator. Okay, so chances are the dollar is going to continue to lose value. Today we're at 1,800. Chances are that in the next 2-3 years we're going to be at $25,000 to $3,000, and we're going to continue to go higher because government is going to continue to keep spending. And before I get to the analysis, I just wanted to briefly touch on the minimum wage. You know, I was going to talk a little bit more about the State of the Union, but I'm running out of time here. So I just wanted to touch on some of the key points. Again, he has mentioned in the state, Obama has mentioned in the State of the Union that he is looking to invest more in education, energy, raising minimum wage, and a number of other things that he's looking to roll out. And one of them is kind of alarming to me, being that we are in a state of economic depression, whether people want to admit it or not. You know, we've had unemployment at 8% for over 5 years. Again, that's a chronic disorder. That's really the definition of a depression. I heard the other day on the news how Europe is going to go back into a depression. And it really made me laugh because Spain has unemployment over 25%, and they're talking about going back into a recession. So if 25% is not a recession, if that's not a depression, what in the world are they calling the recession here for the next coming months? So again, there is, oh, I tell you. So at any rate, so this is what the dollar is looking like. Again, the dollar is going to continue to lose value. Don't get too worried about the drops. You know, drops are healthy. It keeps a bull market nice and healthy. I wanted to talk about the minimum wage, and the minimum wage. The other day, I go to the car wash to get my car washed, and I put the car through that machine, through the giant car wash. It comes out nice and clean. It's all wet. And I have 6 guys team up, and they dry the car within a few minutes. I'm pretty sure those guys are happy. I'm pretty sure they work there for a reason. I'm pretty sure no one's putting a gun to anyone's head and saying, you need to work to clean this car or to dry this car. No one's doing that. People get jobs because they're looking to build skills, or they're looking to make some money. But my question was, you know, I started to think about this raising the minimum wage, and I started to think, what is this car dealership owner going to do if they raise minimum wage to $9? I mean, as a guy that practically speaks any English, or maybe a guy that doesn't have, or maybe a guy that, a young kid that doesn't really know too much about how to wash a car and is learning the right way of washing a car, maybe in the future he can open up a car wash himself and know the right way to do business and the wrong way. So I'm thinking to myself, is this car dealership owner, what is he going to do? Is he going to keep all these guys? These are just 6 on one car. I'm pretty sure there was more guys working there. And my question is, are these guys going to get paid $9 an hour, or is the car wash owner going to get rid of them because they're just not worth $9 an hour? And I think those are some of the unintended consequences that we see every single time the government gets involved in something. And remember, guys, anytime the government gets involved, we're assuming that the government can do it better than the free market can. You know, there's plenty of evidence that suggests that the government cannot do anything better than the free market. And I think the proof is in the pudding here. I think the proof is right here. And again, this is just national debt. This does not include the U.S. total debt of $58 trillion unfunded liability. So without further ado, guys, here is your technical analysis here, your weekly chart here, getting down to the oversold area. Okay, we have breached this downtrend line. So again, we have created new lows ever since we came under 1624. So as far as this goes, now we have 2 more days to the trading week. Today, actually, today, tomorrow, and the following day, the volume seems pretty low. So again, are we going to test this $15.36 level? You know, at this point, we want to check 1564 is another level to look out for. And as you can see, we are currently testing that level right here. Your stochastics again coming, you know, completely oversold, and we have your volume right now, which is pretty strong volume right now. Okay, so again, guys, if this does not hold here, we just have to see. But again, no need to be afraid of this market. As long as you trade conservatively, you should be all right no matter where this market takes us short term. All right. So guys, this is the gold. So again, your moving averages are all above us. So as of right now, we need to find some support here and see if we can come back up to at least 1600. And now we have to, again, until we can break this spell here, lower highs and lower lows, we are going to continue on this downtrend. I think what a lot of traders are looking out for is this 50-day moving average touching this 20-day or this 100-day moving average. That's usually a very negative technical. So again, with that said, we do have to make sure that we keep our eyes open. This could be the low, roughly 1560, 1550 could be the next low, and then after that, obviously the previous low is 1525. Anything below this, the chart doesn't necessarily get damaged too much because, to be honest with you, this is such a bull market that even a correction down here to 1429 to test the 200-day moving average is not necessarily breaking the bull market. But again, all the evidence do suggest that the government is going to help us out and is going to continue to print money. They're going to continue to spend money foolishly. They're going to continue to pass these crazy restrictions on companies so they can't contribute to the economy. So again, I'm betting on the fundamentals, and again, no need to be alarmed. This market does this all the time. It's already done it once, twice, 3 times, and this might be the 4th one that it tests these low levels. But ultimately, the fundamentals will kick in, and we will see higher gold and silver prices. It's inevitable, guys. We're printing $85 billion every single month. Now, when we look at the silver chart here, silver chart looking the exact same. As of right now, the weekly chart looking a little bit bearish. It does look like we're going to be testing the $27 level. If this level doesn't hold, this is really the last level of support here that I see. Roughly, let's say here. Roughly at around $28.11, maybe the low 28s. So again, if this support line does not hold, then we'll be looking at a confluence between this line and I'm sure the 208 moving average will be getting closer by the time we get there, if we do get there. On the daily chart, again, completely oversold. We are looking for a pushback, at least a little bit of a push higher before we continue to go lower. I can't imagine we're going to hit $26 on this one move, but who knows? But again, I see good amount of support here. Stochastics are oversold, so I think we would see a correction back up to at least 29.60. Okay, before we continue to go further down than this area right here, than the $28. So currently looking to test the low $28 range. Again, that's on the daily. Moving averages are above us. And again, as of right now, guys, this is what we have. Guys, no need to be afraid of this market. This market has done this a few times before. Every time the prices dip, we always find buyers. Again, central banks across the globe are buying gold and silver like never before. And, again, as long as you don't have more than 15, 20, 30% of your investment funds in precious metals, ultimately this is the only hedge against inflation. Though the volatility might scare some of you, do not be afraid. This market will rally again. I think it's only really a matter of time. Again, I'm looking to find support here. All right, guys. Again, have a great rest of the day. Bye-bye.